Hey folks, so welcome to another space with me, Kalu Aja. Sorry about that, guys. We had a technical glitch, but we're starting again. Of course, on this space, every Sunday we're talking money, the economy, and of course, finance. And this week we're talking passive income. And if you had joined on the previous space before it was, we had a technical glitch, we were talking about why passive income is important. We said passive income is why you are working, right? Because when you work, you earn active income. And the whole idea is to convert your active income to passive income. That's essentially what we are doing. We want to convert active to passive income. And passive income can be your dividends when you buy stocks, it can be your rental income when you invest in rental property, it can also be when you buy bonds, but any income that you make when you're not physically present and working, that's passive income. Once your passive income can pay your expenses, that's when you can retire. And retirement, like we said earlier, is key. It's the most important uh, financial goal that we all have. Why is it more important? Because we're not going to have the strength to work for the rest of our lives. So just like the ant builds up food supplies and lives on that food supply, we've got to build up savings and invest to then generate a stream of income, that passive income stream that will not just pay our expenses, but also allow us to do what we call a transfer of resources even when we're no longer there. So two key things here: passive income, very important. What you make when you're not physically there, that's number one. And of course, number two, we want to retire on this passive income. Then what kind of passive income? This week we're talking real estate passive income, which is you have funds, savings, you invest in property. You may not have to live there, but what is important for you is that that is basically giving you returns like that you can make as passive income, right? So that's exactly what we're talking about this week. Val Kenya is going to be our host. They're going to talk to us about investing in passive income. You know, most of the folks on this space are from Nigeria, so we're in West Africa, and of course, we earn in Naira, right? So, what we want to now talk about is diversification, right? How can we move a part of our income from Nigeria to East Africa, from Naira to dollars, so that way we are diversified, right, in terms of how we are earning. And in that case, then we are giving our financial balance sheet a more triangular base where we are solid. If anything happens in West Africa, we have something in East Africa and so forth, because diversification is also key to our financial plan. Yeah. All right. Excellent. So, guys, I have the folks from Val Kenya here. If you guys can request as well, if you just request to speak, Adebola, thanks so much for being here. I appreciate you, sir. I was just talking about your video I saw on Nigerian Studios about your own property development you are doing in Nigeria. Nearly, how many views do you guys have right now on that particular video? They were
So surprising enough, about 680,000, like as of this afternoon,
wow.
680,000. Yes.
And it's all literally it's all about that passive income in Nigeria where folks can invest money in your shortlets and can get a return, correct? You've been here on the space more than 3 times, Adebola.
Yes, I have.
Perfect. I mean, so today, Adebola, we're talking, I see Manuel here from Kenya, from Val. We're also talking about almost the same thing you guys do in Nigeria, but in the instance in Kenya, where they're building Dubai style properties and offering that for rent to stay or rent to own. So let me get Manuel in here. I think this counts. So Manuel, are you in here now?
Yes, I am, Kalu.
How are you doing
How are
today?
you?
I'm doing very well. Welcome from East Africa. How is it over there?
Thank you so much for welcoming me. It's fantastic. The weather is fantastic. I don't know whether you guys are catching on the eclipse happening right now.
No, I South Africa has a total lunar. We didn't get that.
Yeah, over here the moon is totally red.
Wow.
It's just nice to see, really, really. So
yeah, take a picture, man. You don't get that often.
Fantastic over here. The weather is good right now. Everything is calm.
Fantastic.
I'll take a few pictures and share and tag you guys. How are you doing yourself?
I am doing very, very well. Thanks for hopping in to join with us today. So, I mean, Manu, we're talking passive income. Every week we come here and we talk about investing. Folks want to know where to put that money aside, how to plan out. So, talk to me about, let's start with Kenya. You talk about the lunar eclipse, but what's happening in Kenya? Talk to me about the business in Kenya generally. Is it a good place to go do business? What's the ease of doing business in that East African country?
Kalu, that's a very, very nice place to start from. I can confidently say that Kenya is still very much a developing country, the continent. The ease of doing business is becoming better and better. I don't know whether it's news from your side of the world, but over here, we have recently become so lucky. The UN is moving three of the departments, three of the departments to Kenya.
Wow.
We are already the headquarters of Google in Africa. We have Bolt over here. We have Uber over here. A certain number of multinational companies have set up base here in Kenya. So business is really growing, and a lot of investors are coming down here, which makes the real estate market here so fantastic. Really.
So, question. I'm just going to ask you a few questions. I've been sharing the VAL handle and the offers all week, right? These are the main questions I've gotten. I'm just going to run them down by you.
Yes.
So, is it possible if I, as a Nigerian or any other country, want to invest in Kenya, what sort of title am I getting, and what sort of visa am I getting?
Sorry, I didn't quite get that. Something happened and I couldn't quite hear you.
Yes, what I'm asking
could you kindly repeat?
Correct. As a Nigerian or not a Kenyan citizen, if I intend to invest in Kenya to buy property, what sort of title am I going to get, and what sort of visa do I need to basically fly in there and enjoy my property? That's the first really question I get from a lot of people.
Oh my goodness!
Not to me. I'll ask again. Can you hear me now?
In Kenya, yes, I could hear the last. I heard the first part and the last part. I heard about how we coming to buy travel to Kenya to buy property.
No, the title. They're talking about the title. It's title and visa. That's what they're asking about. What title will they get, and what sort of visa do they need? Yeah.
So the title. If you're buying so it's in two different ways. If you're buying an apartment here in Kenya, for example, if you're buying land, it's different from buying property in terms of attachments and that sort of thing. If you're trying to buy agricultural land, legally that's not allowed if you're a foreigner. So as a Nigerian, you can't purchase land here, for example, for agricultural use. You'll have to basically use someone else, or either a lawyer or a company or a Kenyan citizen to go that way. But if you're buying an apartment, for example, right now we have sectional titles that are given to each individual owning a unit in a said property. So that's the first thing that you'll be able to get in terms of a title. In terms of visa, it's really not that difficult, because then it depends. It really depends on how long you stay. But ideally, the Kenyan government has made it very, very easy for foreigners to purchase property here. So you don't even need to come, for example, to buy property. You don't even need to come, and everything can be done online. But we normally advise people to also get legal assistance, just so that, because if you're not able to come, for example, someone who you trust, who can go and do due diligence on your behalf. But it's really a straightforward. It's really a straightforward process. All you need to do is have obviously your passport, you will need Kenya Revenue Authority PIN number, which is ideally an area number, and then you'll also need so that way for the taxes basically, and then you'd also need there's a last thing I'm forgetting. Obviously a bank account that is verifiable. And that's there's a colleague of mine trying to join. I don't know whether he's in here.
I put you as a host. I think if you accept the host invite, you can add him. If he's here, let him just request to speak and I'll add him. So let's go to the next question. So talk to me about who is Val Kenya. I've seen Val Kenya. I've seen Val Ghana. I've seen Val. Who is Val? What do they do? Just tell me about who you guys are.
So Val Real Estate really is a developer whose main purpose is to be Africa's gate to real estate. So our main mission is we're trying to make housing something that is accessible towards the continent, all around the continent. So we develop, we sell, and then we manage. When I speak of managing, it means we would ideally be maintaining the house for you, for example. We'd be getting the tenant for you, for example. We collect rent on your behalf. So all you need to do is just buy and then you lay back and then we do the rest for you. So Val initially started in Kenya, and over here we've managed to do about 8 different projects, 3 of which are handed over because we sell on off-plan business model. So 3 already handed over. We have one that we are going to hand over later on in the year. The one that you've been speaking highly of, Divine Residences, and then the rest are still on off-plan. So
off-plan means people can pay for them before it starts being built, and then when it's built, you are basically part of the discounts. That's what off-plan means, right?
Yes, ideally off-plan just lets investors buy at below market price, and then you also spread your payments throughout the construction period, and then we do leave some leeway for people to pay sort of as a rent to own option. So
gotcha.
That's basically what we do. That way we make it very accessible for the middle class, especially since they're the ones who would ideally who is our typical target, for example, because we are niche. We're in a niche market, but we basically try to target the people who are able to afford very, very expensive units, and then also the people who don't ideally will not be able to afford the expensive units. By expensive, I mean we do have villa options, for example, in a location here in Nairobi called Karen, and those ones are going from $1.5 million upwards. So these apartments are not at that price. You're looking at apartment units going from $40,000, for example, all in premium locations in Nairobi. So in Nairobi we have I could just list them if you don't mind. Premium locations, sort of like I think it's Lekki, if I'm not wrong.
Lekki, Victoria Island.
Yeah, Lekki, Victoria Island. So Lekki, Victoria Island, we're looking at Karen, we're looking at a place called Kileleshwa, you're looking at a place called Westlands. Westlands is ideally a commercial and residential area. You're looking at Lavington as well, and all these have been posh areas since colonial times. Yeah, so it's ideally we just picked up from where the British people left us, and then we just ran with those locations. So each of the 8 projects I'm talking about are in prime Nairobi markets, with their locations being very, very accessible to major social amenities. So, for example, from anywhere of those locations, you could get to the airport. It's more or less 10, 15 minutes away because of the expressway that our government just did. We're looking at hospitals. We're looking at social night areas. So we basically just want to be Africa Africa's gate real estate. So if you're looking out and just wants to be
Gotcha.
housing solution.
Okay, perfect. Let's go specific, right? I'm going to share the Val handle on the Twitter on my Twitter, so people can basically go online to Val and see these properties you're talking about. But let's now go specific to the properties. I see 17%, 14%. What are the two broad offers? I see you can buy to own, and it's your property. And I see you can buy and then turn around and give it to you guys to lease out to like you talked about the UN opening up locations in Kenya. So those are the folks that are going to be looking for this apartment that I'm going to rent out to. So talk to me broadly or more specific about those two options: buying to hold and then buying to lease out, and what those yields are and all that. This is where people are really interested in.
Thanks so much for that. So ideally, let me answer that question in two ways. First of all, we have different products for different types of the products that we have are ideal for in both investment and to own in terms of to live in. So if you're a Nigerian and looking to Kenya, you're looking at something that will be your holiday home, for example, if and when you want to visit Kenya, when you're here for business in the short term. So I'll put it this way: there's this property we have called Divine Residences. Now, Divine Residences, ideally, the concept behind it is it's furnished and serviced hotel apartment. I don't know whether you have those over there, but essentially what Divine is, it's sort of like a company. So the property is going to be, once we finish developing it, we're going to hand it over to a hotelier. We've partnered with City Blue and Valo Hospitality. City Blue is our the branding partner, and then Valo Hospitality is going to be in charge of operations. So the way Divine Residence works is any owner who's going to be purchasing Divine will have to just more or less buy for investment. So it will be operated as a hotel rather than just an apartment. So City Blue ideally will come in and take over everything that is related to the hotel running. So marketing, hiring of the staff, furnishing it, because they have to furnish it to their standards as well. And then, so for you as an investor, all you need to do is just really buy and then tell them where your bank account is, so that you'll get your monthly rental returns. So the thing that is interesting about Divine specifically is it's not that risky, in the sense that it is going to be operated based on a pooled income model. So what does that mean? First of all, the revenue share that the hotel will be making will be split 43.5% going to the hotelier, and then 56 point something. I'm not really quite sure with how the number is precisely, but about 56% will be given to the owners, right? And that's in gross. So what that 43% is going to do is it's going to be used by the hotelier in managing the hotels and then paying themselves. Then the rest of the revenue will be shared by the investors per square meter they own. So ideally right now Divine comes in 1 bedroom apartment and 2 bedroom apartments, all furnished and serviced, right? So if your 1 bedroom, for example, is 100 square meters, it means that your revenue will be paid according to those 100 square meters. But the way it works really, and the way it protects you as an investor in the sense of risk is whether your unit was occupied or not, you're still able to make money, because the hotel generates money as a whole unit.
Oh, interesting. So I'm buying like crowdsourcing. I'm buying a piece of the hotel.
Yes. So you're buying buying a piece of the hotel. But also that does not mean that you will not be able to, for example, enjoy the hotel since you're the owner. But it's different because you will not, if you're to stay at your own unit, for example, you'll have to pay a very, very discounted fee to the hotel for that to happen, because it's going to be fully under the hotel here, right?
Okay.
So that's Divine, for example. Now
let's talk numbers for Divine, because I'm only getting feedback on Divine. What's the minimum to get in? What's the minimum to get into this Divine? And what's the should we say the guaranteed coupon? What's the minimum to invest?
So the minimum Divine, the prices are at this point, since Divine is what we're going to hand over later on in December. So at this point, we no longer have off-plan prices, unfortunately.
Ooh.
But what we do have is we have units starting from $150,000
Okay.
right? And since it's almost going to be handed over, contractually, we are supposed to have about 6 months. We're supposed to give the hotelier 6 months to come in and do their own renovations, for example, to put in their standards, the furnishing, everything will take about 6 months. And then from that, for the first year, we are guaranteeing investors that they'll get at least $1,700 a month in rental returns. So if you do the math yourself, if you do 1,700
divided by
dollars by just 100, if you do the return on investment there, you're looking at 1 second. I'm just trying to do the math myself right now. So if you do 1,700, you multiply by 12, then you multiply by 100, and then you divide that by 150,000. You're looking at 13.6% in the first year.
That's dollars, USD.
That's in US dollars. Because you purchased in US dollars, you're going to earn in US dollars.
Okay. And I heard you say guarantee.
Yes. That's how confident we are as Value Real Estate in Divine. For the first year, we're giving that as a guarantee that they're going to make that amount of money, because so Divine Residence is located along Riverside Drive. Now, a quick Google search would show you that Riverside Drive is a posh location that is full of expatriates. Now, we're talking about there are 3 embassies there. The Ugandan embassy is there in that location. The Dutch embassy is in the same location. And there's one other embassy that is keeping my mind right now for some reason. But it's full of expatriates who come in for the short term. So ideally, Divine is supposed to service these people. The companies that are there, Microsoft has an office.
I think I lost. I'm not hearing him. Debul, can you hear him? Manuel, if you're speaking, I personally can hear you. I'm not sure if anybody else can.
There are Airbnbs in the area that are charging at least $100 a night.
Wow.
For, say, just a room, just like a studio apartment that is charging about $100 a night. What we're going to be charging for our 1 bedroom, in the low season, I think we're going to be charging about $94 a night, and between $94 to $115. And now in the high season, it's going to be upwards of $130 thereabout. So it's Divine is unique in that sense.
Love it.
The only other concept that comes with Divine in Kenya, funny enough, has been done by the same City Blue. It's called Skynest, and it is in Westlands. The people who invest in Skynest are reaping it big. Any of you who's listening to this conversation right now could just Google Sky or YouTube Skynest, and you see the concept.
Skynest.
How it is.
That's NEX.
Skynest. Skynest by City Blue. it's on Westland. It's a really really nice place, and that's the same concept that we're going for. It's just that they managed to complete the building earlier than we did.
Okay, question again, Mano. Is this for life? So I'm buying like equity. I'm buying equity, right? And that's what I'm buying. If I get into Divine, that shares like equity.
That's the model that you're buying, but ideally you will still get a title deed for your unit.
Oh.
You will still get a section title deed for your unit, so it will show that Kalu owns unit number HA or something.
Yeah.
But in terms of earning, you're earning a share based on the square meters you own.
And I can transfer this. I can use this for collateral. It's my own. I don't have to go back to you guys.
Yes.
Okay.
No. You really, ideally for us, what we've done is just we've partnered with people who are excellent in the hospitality industry, because we saw that there's a gap in the hospitality industry, at least in this market.
Yeah.
And we're just helping you as an investor, because that's just like what we really engage us to do.
Okay, fantastic. Let's go to the other ones. I think we've gotten a bit of Divine. Questions are coming in. I'm going to share them with you. Let's go to the other option that you had.
So the other options we have follow the mission of our company, which is invest, live and invest. So we have three units three projects that we've already handed over, right?
Mm-hmm.
So one is called Moon Valley. You Kalu, I know you know this because we've spoken before.
Mm-hmm.
So we have Moon Valley. Moon Valley is in an area called Kileleshwa, and Kileleshwa is also historical in the sense that when in pre-colonial in colonial times, sorry, not pre-colonial, in colonial times, only white people are allowed to live in Kileleshwa. So now Kileleshwa is this very very premium location. So premium that there is only one commercial center that is servicing the whole area. Now, on a radius of 4 kilometers of where the property is, it's just recently that one retail chain opened a store there. Otherwise, people had to go all the way to the next location, which is in Kilimani, to just get a mall, for example. So Kileleshwa was that premium that it was that regulated, because sometimes the danger with bringing commercial spaces is you expose the residents of that location to all sorts of people who they might not want to be. So it in the sense that location maintained its exclusivity. So we have our first project there called Moon Valley, and Moon Valley was this Dubai inspired property that has from studios 1, 2, and 3 bedroom apartments, and so we have a mix of families and also short-term stays there. I kid you not, Kalu, the people who purchased Moon Valley, we have about 15 clients from Moon Valley who have purchased 4 of our other properties just because of how much money they are making. Now, when we started with Moon Valley, the construction period took less time than we initially intended to do. So it came to the market quick, and right now it has an about 98% occupancy rate every other year. Getting a place there is difficult, even for us as staff working for Val. Getting a place at Moon Valley is just completely different because of the demand that is there. So now, if you're an investor and you, especially because I'm now speaking to Nigerians, if you're trying to invest from Nigeria, you're sure to use your unit at Moon Valley as an investment, just for rental lead. They're charging about 9,500 shillings, which is about $80 for a studio a night. And now, if you do the math with 90% occupancy rate, these people are making almost 25 up to 25% rental return on investment on rental income. So it's really an amazing project that we have. We have a similar setup in Westlands now. There's this popular tower in Nairobi called GTC, and they are also a developer as well, a Chinese developer, and they've developed for JW Marriott. Now, this other property of ours called Elite is just opposite JW Marriott, and the same numbers are happening there as well. We're seeing a lot of people, okay, because Westlands is really a vibrant area, and you're sure to find, because it's completely mixed, it's commercial and residential. Now, the residential, it's a bit minimal as at now, because most of the properties that we're seeing there are hotel-like and hotel concepts, because of the offices around there. The nightlife in Westlands is crazy if you're that type of person who enjoys going out to, and having a good time. So because of that, the demand for housing units there is off the roof, and it's also a very, very secure area, because it's just literally, it's a stone throw away from the Nairobi CBD. So for Elite, now unfortunately, no one, unless someone is open to selling their unit, Moon Valley and Elite is fully sold out, and so is our recently handed over project called Wilma in an area called Kilimani. Now I've mentioned Kilimani because it's just next to Kileleshwa, and it operates on the same wavelength, in that these places are highly exclusive because they are secure. They're near major social amenities and all that. So these are the properties that we've handed over that our clients are really reaping big from. There's something interesting in and you can listen to in finance, you know, in the real estate market called price to rent, the price to rent ratio. So now, ideally, for the market in Nairobi, it almost takes you less than 10 years to make money back in terms of what you spent in buying the apartment. And that's what most investors are enjoying in the market in Nairobi. The price to rent ratio in Nairobi is lower than markets like Dubai, South Africa, US, for example, Britain. For Divine specifically, because that's the one I know. Divine people are about to make their money back in less than 8 years, for example, because they're earning almost. They will be earning almost 13% consecutively. There will be a point where they're earning upwards of $40,000 a year on an investment where they made nearly $150,000, give or take, right? So this is what we are seeing with the market, and we have real data just showing what our investors are making in terms of.
So yes. If we're talking numbers again, what's the minimum to get in? I hear you talk about the yield so far. What's the minimum to get into these ones now? But you said there are no units available.
So there are no units. There are units available at Divine. We have Symphony, which is also in Lavington. There are units available there as well. Depending on the objective of the investor, right? We have options. So, for example, Divine has units open. Symphony has units open. We are about to launch another project next month in Westlands that will have before launch prices, pre-launch prices. We're looking at very, very low prices. Symphony that I've mentioned in Lavington, actually, this month, I had a chat with the sales manager, and he was saying that for the people who are attending this space who would be interested in investing in Symphony specifically, so it's a studio, 1, 2, and 3-bedroom apartments with the option of having 4-bedroom duplexes.
Yeah,
they'll be able to book a unit with merely $3,000.
What's that mean? Book? You can reserve.
Yeah, so they'll be able to reserve. Sorry. They'll be able to reserve a unit with $3,000, and then because ideally how we structure our payments is we're looking at 30% deposit, and then the rest spread out through construction period, and then the rest they pay as a rent to own option. Which, if you're a landlord, your tenant pays on your behalf ideally. So the sales manager had promised for this particular space, whoever is interested in buying a unit will do so. Will reserve with only $3,000.
Okay,
And you're looking at so like the prices for that are starting from $50,000.
gotcha. Let's model this out, right? So I want to buy a
Yes.
property, and I put my 3,000 down to reserve. Then I do the 30% after that.
The way to structure it is you reserve it with $3,000, and then um, because this is going to be a 1v1 situation, so the way we handle you is not the way we would handle, for example, Romy. I'm seeing Romy here listening. So we would structure it in a way that, for example, if you prefer a long payment period, we would stretch out your payment with the agreed payment period, for
I see.
example.
I see. Then when does the rent to own kick in? So if I
I don't know whether that answers your question.
yes, it does. So if I reserve with three
Uh,
thousand, oh, can you hear me?
yes.
Can you hear me now? Okay, Manuel. Okay. So what I'm saying that if I reserve with the 3,000, then when does the rent to own kick in?
Oh, yes.
Did you get that question?
So, so,
Yeah.
so, so this particular project that you is still under construction.
Okay.
So it sorry, Kalu, I had the rent to own option. When does it kick in?
Yes.
Is that the same question?
Yes.
So what I was answering is this a two-tower property going up to 22 floors. So where the construction has reached at the moment, and this is available for our social media platforms. We on the first tower we are already at the 14th floor right now. On the second tower, they have just started doing the basement parking, and the basement parking uh, parking the third basement parking, and then so the show is already ready. We have two units ready that already because they already bought those units. So that is still under construction. We're looking at completing that by next year, in Q4 of next year. So if we do complete it by next year, Q4, people who have invested in it are looking to earn from really Q1 of 2027.
Understood.
So it's only a year left in the construction of that particular unit, in that particular project. Sorry.
All right, folks. Manuel, we could go on, but I think I have a few questions I'm getting on DM. Lots of interest. Folks are asking, number one, do you guys have a presence in Nigeria? Is there a sales office? If they want to speak to you, is there something? So that's what they're asking now.
Hello?
Yeah, Manuel, can you hear me?
No, I didn't say anything. Sorry, I was just trying to listen to you.
Gotcha. Folks are asking, do you have a presence in Nigeria? Do you have a sales office? If they'd like to meet with you, where can they meet with you in Nigeria? Folks are asking that.
We wouldn't even be paying to Nigerians if we were not in Nigeria. Our presence in Nigeria has been very, very big this year. Valleys is also in Ghana, which is just your next door neighbor, and ideally, whoever is interested in investing in our properties, we do give them a chance to go to see our properties in Accra. We have two completed projects, and we have two ongoing over there. In fact, something interesting that I was told the other day about our properties in Accra, the son of the president lives in one of our villas over there. He's a client over there. So Val is really a trusted brand in Ghana, and since they are your next door neighbors, that's something that we can do. But we do have a presence in Nigeria. In fact, we have two ladies over there. One of them is called Pauline, who's at the office. I'm trying to remember where the office was, so that I don't mispronounce the name. We are at Ibukun House.
Ibukun
We
House.
had Ibukun House, yes.
Yeah.
At the Tokunbo Street. Sorry,
Oh my
my
God.
Nigerian accent is so bad. I don't know how do you say that again?
Adetokumbo.
Ade Tokunbo, yeah.
Oh my
So
God.
that's where we are at. I didn't want to butcher you.
Oh, you're fine.
I didn't want to butcher it. So we do have we do have a lady over there, our partner, who's in charge of our operations there. Her name is Pauline. We also have another lady called Sarita over there, and then our head of sales here in Kenya is in and out of Nigeria. Really, we for Divine Residences just this year alone, we've sold over 15 units to Nigerians. And if you go down, if you check out our Instagram, we do have a lovely gentleman who is Nigerian but lived in Europe for a while, who got 2 units. So he's been very gracious enough. He likes endorsing our products because he says that he didn't think that there would be that, for example, the Nairobi market would have products that are on global standards in terms of the finishing. Yeah. So and that's one of our biggest strengths is the quality of the finishing of our projects. You're not looking in to come and then after you've started living in your house, you're probably finding that you have plumbing issues. A lot of developers have these problems. Sometimes a pipe is supposed to move, I don't know from where to where, but then when it rains, sometimes you see your sitting room leaking, and you're just like, okay, what's going on here? So those are the type of problems that we completely avoid. So when we do hand over our project, we normally are sure that there's going to be absolutely no issues with that. Another strength that we have as a company is in the amenities, because we realize the housing demand in Nairobi is high with the types of amenities. So now you're not just selling houses. Our houses come standard with fitted kitchen and a washer and dryer, and then so that you don't have to hang your clothes on the balcony. That normally looks very disorganized when you're on the outside looking in. It spoils the facade, specifically the facade of the building. It looks so disorganized. But we do have amenities ranging from gyms. We were the first developer to put out a jogging track in a property. So 2 of our properties are going to. One already has a jogging track. We have heated swimming pools on our properties. We have a gym, fully fitted gym. All you need to do is just come and start working out. We have a gaming room with a pool table, with a foosball table, with a table tennis in there. We have a golf simulator for those people who enjoy golf. Our latest project will have a cafe. We'll have a cafe. We'll also have a movie theater inside the amenities floor. We'll have a kids play area, because the way Nairobi is being planned right now, a lot of thought is not ideally put out to children. And as when we were growing, we really enjoyed playing outside. So because we know that is a fundamental thing about people who have children, is we do kids play areas that is fitted with slides, with all that nice stuff.
Gotcha. All right, let me just reset the room. We spent nearly an hour here. We've been talking about experiencing Nairobi's real estate to get passive income. We've talked about passive income, being that income you get when you're not physically working. We've tied that into retirement. We've said this is your most important financial goal because you want to convert your active to passive. Now, Manuel has given us some big, good demographic numbers. He said in Nairobi, we have Microsoft is there. The UN is opening up 3 new, should we say, their practices are going to move there.
They're shifting their 3 of their departments from New York and Copenhagen to Nairobi. So they'll be fully operating from Nairobi. Yeah.
So
that's Google Africa.
Google Africa. Go ahead.
Yes, Google Africa is in Nairobi. We are developing Konza City with Konza City is developing as a Silicon Savannah, and yes, and Meta at the moment, Meta and the government are having talks. Our government is also passionate about trying to host the Grammys over here. One of these 2 years, I think they're meeting for having to host the Grammys over here.
Gotcha.
So we have a lot of influx of expatriates coming in and out of Nairobi right now. There are about 2 million tourists coming into Kenya, obviously to check out Masai Mara and going to the coast.
This is annually. This is annually.
This is actually just this year only.
2 million.
Annually, we're always doing similar numbers. I could check and confirm for you, but annually we normally do similar numbers because Kenya, unfortunately, we don't have oil reserves like Nigeria does, so we heavily rely on our tourism. Really, heavily rely on our tourism. For the longest time, the tourism sector has been carrying our economy. But for the last since 2019, the number of transactions in real estate has made that real estate is contributing about 6% of our GDP right now.
Wow. That's a lot.
So since 2019, we've had about $700 billion worth of transactions in just real estate, really, and we're looking to make it more than 900 billion, coming to a trillion. So the real estate market is now vibrant, also because the population growth here in Nairobi, really, the population growth has that we are in a deficit of about 200,000 housing units every other year.
Gotcha. So, I'm trying to reset this point, right, to folks listening.
Yes.
When you want to invest, you go where the market is. You know, if you're looking to invest, you go where the market is. And I think Nairobi, with the presence of the quote unquote the diaspora from Nairobi, the diaspora from Nigeria, the foreigners, i.e., the UN, the Meta, the Microsoft, you have a market that can sustain dollar rentals. That's the key thing there. And if you put up a skyscraper in Nairobi, there are sufficient numbers of tourists, of foreign workers, of the multinational, of the government, international staff that can sustain dollar rentals. So what you're doing is you're buying into that flow of dollars to pay rentals. You buy into a device, like Manuel has said, buy into a hotel type setting where you are getting a piece of that property there, or just spending a luxury Dubai style property where you can live if you go for holidays, or you can rent out and let someone carry on the management while you just enjoy that passive income. It's diversification. Most of you here are Nigerians, so we're in West, they're in the East, we earn Naira and dollars, they earn shillings and dollars. So you are diversifying away from one currency, one location. You are building your own balance sheet. There's nothing wrong with that. It's all about your own money, right? That's what we're doing here, talking about investments for you. Man, I've got a few guys I want to speak. Let me get Odinaka first to hop in here. He has a question. Guys, if you want to speak, request to speak. I get your DMs already. Just request to speak and I'll add you. Odinaka, hi, how you doing?
Hi, Carlo. Hi, Count. My question is, I've heard him and I've heard the good statistics rolled out, but then we still understand the two things for me. First will be exit strategy. He has talked about the repayment, and you could get your money paid back in 8 to 10 years, like he mentioned. What are the options for early exit? Someone comes in and he may not want to stay out the entire tenure, or maybe he finds a better investment and he wants to pull out. What are the plans for exit strategy? That's one. Then the third question becomes the peculiar African problem with Nigeria. We have the Nigerian factor. For the people who have been to Kenya, there's an obvious hostility to Nigerians and investors in the Kenyan market. So it's easy to say, yes, this is where the money is, let's chase them. But what has been done? What is this company doing to douse that? And also, what do they think is going on to change that perception?
Let's just focus on the money side, right? I hear your question. Let's focus on the money side, because if you use that question, there's also South Africa.
Okay.
And lots of Nigerians still go to South Africa. There's Dubai, Yemen, we still go there. US is deporting, we still go there.
The third question becomes, the instability, where I call it, I don't know if I'm stability in full, but the political turmoil. the news or the pillars we get from here might be quite different. But yes, we know a lot of the international organizations and tech companies are moving to Nairobi. Nairobi obviously is the capital of the Eastern Bloc of Africa. So the market, the rental market, it cannot be overstated. But then we also know the Ruto political and the riots and all that. So that's also a macro issue to be talked about and looked at. So what's their perspective about that? Because that's a major issue. That's a major drawback if somebody wants to go into that market. So what's their response to that? Thank you.
Manuel, did you get questions?
I can't hear him at all.
Oh, really? Let me see if I can. Odinaka just looking at him something else. He was asking, the first question he asked about was the exit strategy. In case I get in, I want to do the 15 years, but after 3 years, I would like to pull out. What is the exit strategy for me? Would you guys take me out? Can you hear me?
Sorry, I can hear you now. Sorry, how do you say?
Yes, he was talking about the exit strategy. Let's say like if I don't want to wait for this number of years, I would like to invest early, maybe in 3 years before I envisaged. Is there an exit procedure for this sort of investors? That was his first question.
Okay, so just to add that quickly, yes, there is, because yes, I got the question. So for that question, the answer is yes, there's an exit clause. So ideally, when you're buying property, Odinaka, you have to sign a sales agreement, and that agreement is literally a legal binding agreement outlining, the terms of sale, the price, everything, and all the conditions around that purchase. So we do. One thing I know for sure is we do have a lot of clients who, if somehow their goals drift in a way that they want to put out the investment, and they do get a refund. I think if I'm not wrong, you do get a refund, but the company, I think, will retain 10% if I'm not wrong. But I know that is subject of the agreement that you have with us as a client, and agreements are not the same, because depending on how good also your lawyer is, there's some clauses that they would have to put in your agreement that is separate from what ideally, for example, I would agree with the company. So, but I know there is an exit clause if you do want to.
Okay, but just to follow up on this question, on my own follow up, the title is my title. I can transfer it to someone without recourse to VAL, right? I can go to Nigeria and say I transfer this title to Odinaka. I can do that, right? And Odinaka claims ownership, but do we have to come back to you guys to do any sort of legal paperwork?
I think I'm not so sure, but from what I know is so ideally the sales agreement will be based on the laws of Kenya, right? And so just because we are attached to that property ourselves as well, you will have to notify us, because anyway, if you're going to sell that property, we will have to be notified in one way or the other, so that we know whoever it is that you're selling it to, how they come in and how because we still attach to the property one way or the other.
Gotcha.
In the sense that we're the developer. Yes.
Okay, Odinaka, could you ask the third question you asked about the failure? You talked about the issue with Africa. Could you ask that question again so I can relate to him? Because he can't hear you.
The last question was the insecurity, or would I call it insecurity, political issues, that affects everything you do.
Right.
So I don't know his explanation. Yeah, because as an investor, you also look at the socioeconomic happenings in any country you're trying to invest. So the Ruto issues have been occurring since a couple of months now.
Gotcha.
So what's the argument?
Okay. Let me put this way. If with the Ruto issues we still hear him saying that Microsoft, Meta, UN are still coming, doesn't that answer that question? I mean, they are still coming. And he's saying there are 2 million tourists in Kenya. 2 million. That's that you're talking about country risk, right? But he's saying, listen, even with that country risk, you have all these folks still going there. I mean,
yeah. So yeah.
The question is,
it doesn't matter what you're doing. All you need is guarantee.
He's having concerns of the political.
Yes, Manuel. He's talking about the political environment. I mean, we saw the riots last year. This year again, we saw the riots and all that. So he's asking the market risk, the political risk for Kenya. Is that a factor in our consideration? That was his question. I basically was saying the point that with the risks are real, but we still see the investors, like you said, going back to Kenya. So it looks like the investors have factored that risk in and says, maybe that's why you guys are paying 17%, because it's higher than invested in Manhattan. So that risk premium is
way higher. Another important thing, just to add to what you said, Kalu, is ideally real estate normally feels the effects of political instability last, and that's something that we've seen. For example, if I'm going to compare to, like, for example, stocks or something, all those other asset classes, you find, for example, with stocks, Trump will say one thing today and the market just goes crazy the next day, which is not the same case as here with real estate. In fact, for us, it didn't, as a stakeholder in the real estate industry, the protests didn't do much, really. Actually, they didn't do much, really, because the protest was only concentrated in the CBD area, and that's really far away from all our locations, really. And in terms of business, we still had people coming in and buying property. Also, because most of the people who are our clients as Val Real Estate are actually foreigners. Funny enough, we have a lot of Nigerian clients. We have a lot of Congolese clients in the wider Africa. We have a smaller number of South African clients. Most now the bulk of our clients come from the US as well, the UK, so Europe, America, and some parts of Asia like China as well. So the political environment is and it's not that bad as it looks like in the news, by the way, funny enough, because as we were here on the ground, some parts were really affected that I can't lie or say they didn't happen, but for the most part, we enjoy a really political, stable environment for the most part. Really.
Okay. Well, do you have a follow up, or I have a DM I want to ask him about? Do you have a follow up, Naka, or you're good?
Please go ahead. Thank you.
You're welcome. Yeah. So Manuel, the question here, someone is asking if I don't have a bank account, US bank account, what happens? Do I have to get a US bank account, or that's his question? What happens if it doesn't have a bank account in the US? How does it get paid?
It doesn't have to be a bank account in the US. You just have, for example, a dollar account, for example, or even a Naira account. But then your Naira account will be affected with how the Naira is performing against the dollar, right?
So you can pay Naira, but you can convert to Naira and pay the Naira.
Yeah, it will have to be converted. If that's in the sense of paying out. That's in the sense that you've bought a unit and we are managing on your behalf. Now, I'll have to say that we also charge a 6.5% managing fee.
Management fee.
Gross. Yeah, because we also do market on your behalf and we have operation. We have staff that we pay to maintain your unit while you're away. So that 6.5% goes into making sure that you even have something as gas in your kitchen, for example. Make sure your property is clean, really, and it's not. Because sometimes people travel and then they leave their houses and they find a very, very foul smell from the fridge, for example. That kind of stuff. Yeah.
Okay. So, and I'm also asking how to get in touch with you. Like you said, I have an office in Lagos. I've also shared on my TL a Google Sheet. If you want to contact you, just go on my timeline. I think it's one of the last tweets I shared. You see a Google Sheet there. You can put your name, phone number, and email. They will contact you from Val directly, and discuss with you. If you have more questions, you don't want to, most people here don't talk about it. It's a lot of money. So you can contact them personally and they can reach out to you and you can ask those questions. So just go to my TL, you see the Google Sheet there. One of the last two tweets I've shared is there. I also put up the website for Val as well in case you want to go online and look at the project, the pictures of the project as well. It's also on there. Let's get this gentleman. I've got Ella Fikwa. Is it good day? Ella Fikwa. Hope I get that right, sir. But that's I did not.
Yeah, you do.
Go ahead, sir.
Good evening. I'm contacting you from Nigeria.
Perfect.
And, I love the heading, and I so much cherish it, and I picked interest. My question is this: as a young man that is just coming up, and though we're struggling with life as far as Nigeria is concerned and the economy of Nigeria is concerned, and we're passionate about making nice meats for a living. How will somebody come up with this, partner with this idea? Please, I just joined the line and I just joined the space, and I need more enlightenment on that aspect because I so much am interested in this.
Yeah, I mean, I hear you. That's a great question, honestly. I hear you. Let me mute you so but you see, my page is for financial literacy. I would advise that what you want to do is to try at this stage. You're a young guy, like you said. You are at what we call the asset accumulation stage. This is the stage where you are trying to earn money either through passive or active income, through education. So you want to increase your skill level that allows you to earn more. I will say this is something that you do when you have accumulated, right? When you have the means to invest. So don't be in a hurry. I would say to say this is an opportunity that might pass you by. Focus on building up your own skill level. So that skill level you built up will allow your income to go up, and then you can invest in these properties and other properties that you see. There's no rush. Like I said, focus more on how can I improve my earning power. Once you get that out of the way, this thing will become something you should do. Does that make sense, sir? All right, Manuel, that was a young guy asking about property. So, Manuel, I have more questions on DM. Somebody is also asking you a question. So I've asked you this one. USD is guaranteed for the first year. I just say for the first year.
Yes.
Yeah. He's saying apart from the blocks of flats, you mentioned a villa. Do we also have details of the villa, or is that about the villa? Yeah. Apart from the blocks of flats.
Yes. So the villas is actually a very interesting project. The villas feature 5-bedroom, fully AI powered homes that are in Karen, sitting on half an acre. So there are only 20 of them. In fact, we'll be selling them. We only have 6 remaining. All prices starting from $1.5 million. You get a 5-bedroom. There's if you're lucky, if you're really lucky, you'd get one with. I don't know whether it's still up for grabs, but they're giving out a lift inside the apartment. So you have two kitchens as well. There's a soft kitchen and there's a hard kitchen. The difference is one of them is accessible to the one of them is sort of like an open plan kitchen that might be viewed while you're in the living room, and then the other one is closed off. There's a swimming pool. Each villa comes with its own amenities. So you get a swimming pool, a sunken lounge. You get a spa and sauna, and then there's also a lounge just outside, detached from the villa. Now that lounge is interesting in the sense that it is not a servant's quarter that people are used to. So in that space, depending on what you do, what you choose to do with it, you just ideally let us know, and we could either have it as a fully fitted gym for you, we could either have it as a home office for you, or we could either have it as a 1-bedroom apartment that you would ideally use as a guest house, or if you have one of those elder sons that you don't want in the house, or those visitors as well who you don't want sleeping in the house, so you could have them. And then it comes also with eight parking slots, and all this is in a gated community. So if you're interested in the villa, the prices are starting from $1.5 million. But you know, we are able to accommodate.
Gotcha.
If you have an offer that the sales manager ideally is in agreement with, then you could probably get it for something lower than that.
Okay, so talk about the office. Yeah, most of the questions are really asking about the office, how they can reach you, the yields. I see just variations of that of the questions around that. So let me. I do have my own question as regards Kenya. Just
Yes.
on the beside, the Chinese are moving into Kenya. I know Kenya is the landing point for BRICS. Does that
Yes.
also affect the demand for property? Are the Chinese renting or building? Just talk about China and Kenya for a minute. I know they're building that railway from Mombasa to Nairobi. Is there a big
Yes.
Chinese influence in the Kenyan economy right now?
There's actually a huge Chinese influence, and it has been since 2010, since 2010 really. The Chinese are an interesting lot because they are also building. They're also developers. Now the difference between the Chinese and, for example, us as Val is the Chinese have shown a pattern of developing and leaving, developing and leaving, developing and leaving. So they'll come, put up a project, and then they sell it, and then they go away. For some reason, they don't want to stick around, and that normally brings concerns with that short-termism concerns. So, what differentiates us as Val from the Chinese developers specifically is that we'll stay to manage. So in case of any other thing, we'll still be there. It's not like you give us money and then the next day we're not there, for example. But there's a lot of Chinese influence in Nairobi right now. They are constructing a lot of the of roads, for example. They are constructing some hospitals. They have a lot of government tenders. In terms, because they're also the ones who are giving us the loans, so they're there. But in terms of developing, they've still not shown any signs of building brands that are going to stay in the market long. In fact, they just build and they leave. They go to other markets because they also have interests in Tanzania as well. They have interests in Zambia. They have interests in Zimbabwe. So much more than they do Kenya as of now.
Gotcha. And then just a final question for you, Manuel, from me. I don't know if anybody wants to speak. No one's going to speak. This might be my final question. Someone's asking you, do you have plans to build in Nigeria? Is there a plan for about Nigeria?
I can't speak for my bosses really, but we aim to be Africa's gate to real estate. We are already in Ghana, so I hey, why not build a presence in Nigeria soon really. As at now, we are looking to expand to Tanzania as well because Val is in Kenya and Uganda. So in the East African setting, the company wants to make it full circle. So by next year, inshallah, we'll be in Tanzania next year, and then hey, we are looking to be Africa's gate to real estate. So why not? But until then, please, you're welcome to Nairobi.
All right, perfect. I'll take you up on that offer. I want to come see those properties in Nairobi. I think I've been there a lot.
Please.
Would like to come over and see you guys. Yeah. All right, Manuel.
Please.
Yeah, I really appreciate you spending your Sunday with us away from the lunar eclipse. That was the thank you so much for that. Yeah, and just to recap what we've talked about, we've tried to talk about diversification, not just away from diversification into properties, right? And why properties, because of the passive nature of properties, you get the rental income in terms of income, but also the asset appreciation in terms of the property goes up in value, but you're also getting income, cash flow to your pocket. So property is a great investment to have. Property is all about location. We've talked about the location being Nairobi. You've explained to us how we have a lot of the tourists, and we also have a lot of the foreign multinational workers that earn dollars and I'm going to spend those dollars also in real estate. So we are essentially tapping into a pipe that has got a lot of dollars in it. So if I'm a Nigerian and I'm in Nigeria, I earn Naira. If I want to do a bit of diversification, Nairobi looks like a perfect spot for me. It's in Africa. I can fly there. There's Kenyan Air connecting both Nigeria and both Lagos, Abuja, and Nairobi. I can fly there, do my holiday there. I can also rent out that building and also earn that cash flow. But I own the building. That's on my balance sheet. It's giving me that, that asset side. I can also use it as collateral. So it takes a lot of boxes for the average investor in Nigeria to look into. So guys, I would say talk to your financial advisor. Here we're talking just education. If you'd like to do an investment, talk to your advisor. If this is okay, reach out to Val. I've shared the contact, list or Google Sheet on my page. You can also go directly to their website and also reach out to them, have a conversation. They are also in Lagos, Nigeria. You can also talk to them. They've got humans there that you can talk to. You can go to Ghana and see what they've done. You can also request. They can request. They want to go see a viewing. I'm sure Val will arrange that for you. Kenya has visa on arrival. So if you land, I want to go into Nairobi, you can do that and go see the property for yourself. Look at the surrounding environment and see if it suits you. I think it does because, it ticks, like I said, a lot of boxes. So this is just a wonderful opportunity for us to also learn. We had Adebola here also from Ashore talking about what they're also doing in Nigeria. So this also ties in. You've got to invest in an asset class that beats inflation but gives you current income. That's what you want to do. Beats inflation but gives you current income. With property, the asset value tends to beat inflation, and then the current income tends to give you that means to have purchasing power, especially if that current income is in USD. It's a great combination. So take your Naira, do dollars, invest, earn back dollars, spend in Naira. Perfect. That's what I'll say. Mono, any closing remarks for me?
I just want to thank you so much for setting this up. Really looking forward to having more and more conversations about the market here in Nairobi. We also really just to reiterate what you said. The best thing for anyone who's interested is to fill in the form that is on your TL, and then we will reach out to them personally. If they do want, we just to see, because real estate is real, so you need to see it. The nearest place is if you visit our offices in Ghana, in Accra, and then hey, we could just start from there, and who knows if God wills it, we'll be in Nigeria soon. Our team comes there every now and then, so we hope to see you guys soon. We have a launch. I insist we have a launch of a new product in Westlands again next month, and we're going to be having some pre-launch offers. So please follow our accounts. Val Kenya is on here. You could follow it on Twitter. You could follow us on Instagram as well. On all our socials really, and we'll tell you about how give you some good deals on getting into property, and we do have very, very good payment plans. So even if I don't remember the young man's name who said he's young now, he's going to miss out on these deals. No, we always have a property for you, and we always have terms that are very, very favorable that will make sure that you don't miss out, because there's some units that people actually pay as low as $1,500 a month as an installment. And I don't know how much $1,500 is in Naira, but it's not that much in Kenyan shillings.
Which property is that one for 1,500?
There's a unit. Okay, so depending on the unit price. So for example, give or take a unit right now at Symphony, the one I was telling you could book with $3,000. A unit at Symphony is starting from $50,000. Yeah. If you divide 50,000 by a payment plan of 2 years, you'd see. So let me just do the quick math there. 50,000, you divide it by 24 months. Yeah, that one you're paying $2,000 a month.
Okay.
Really, and it's not that unaffordable really, but what will get you in return is where the juice is.
Love it. Love that information, guys. Again, we're talking money. the economy and finance, and I believe you've sat with us all for about nearly an hour, 15 minutes, just also hearing what these guys are talking about. If you feel it fits your profile, your risk profile, and your objectives, pull the trigger. You can talk to me personally on DM, like most of you are. You can fill out the form, and they'll get in touch with you. And that's what we've got today. So on that note, let me thank Manuel from Val Kenya. Let me also thank Val Kenya, and also Renee. You guys have been wonderful going back and forth and speaking to you guys. I hope when I come to Kenya, I can get the fish. That fish that is on the streets. I like that fish a lot. That's my only ask.
Please, that's the first place we'll take you.
That's my only ask, yeah. Also, don't talk like Adebolu for also being here, spending his time again with us. He's always here. He's always been giving us great tips on real estate in Lagos as well. Adebolu Mayowa, I do appreciate you, sir. All right, folks, thank you so much. I'll see you guys again next week. We're going to be here every Sunday, 7 p.m. We're talking money, the economy, and of course, finance. Adebolu, did you want to say something? Sorry.
Yeah, I just wanted to ask him. I mean, these returns, are they pre-tax or post-tax?
Nice.
Ideally, we can only speculate with before taxes. This is before taxes. So, but the taxes you pay are not that. Ideally, the most of the taxes that you pay is that rental tax and the stamp duty. Really, and stamp duty is about 5%. It's not that high. The Kenyan government is very, very helpful in trying to making investments in the country a thing. So it's not that high.
I'm asking if Nigeria and Kenya have a joint double tax treaty. As I'm just asking online now. So in case if I pay those taxes in Kenya, did I get a deduction in Nigeria? I know Nigeria just passed a new tax policy, so I'm not sure if that would work.
Okay.
It's just giving me an answer now. Yes, Kenya and Nigeria both have a double tax treaty. So yes, we do have a double tax treaty with Kenya. So what that means is technically, if we pay something in Kenya, we're able to write it off. I don't get into the exact, but it seems we have it. So Manuel, you have to look at it, and that's going to be a key point for you guys to look at the joint tax treaty. So if Nigerians buy and they pay taxes, they are able to report those taxes in Nigeria and get a relief on those. So yes, we do have a joint tax treaty with Kenya. So that is wonderful to know. All right, but great question again from you. See how the CEOs go straight to taxes. All right, Manuel, thank you so much. All right, Manuel, are you all good, sir?
Yes. Thank you so much for having me.
Adebolu, you're good? Adebolu, you're good? I'm sure you can hear me again. All right, perfect. All right, guys, thank you so much. I'll see you guys next week. Really appreciate you guys. It's going to be a great week. Take it slow, take it easy, and go out there and make the money. Yeah? Take care of yourselves. See you next week. My name is Kalu Ajar again. Thank you, and bye.